The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Lee from Bell Direct. And joining me on the panel tonight, we have Peter Escher from Invart and also Nick Radge from the Chartist. I mean, the market over 5,200 points now, and looking like we're going to test the all-time high for 2013, which is at 5,249 points. And I guess the big question for investors and traders is, has the market run up too quickly, too fast? Are we due for a pullback, or will the momentum continue? And the momentum king, Nick Radge, what do you think?
Yeah, well, the momentum's certainly very strong. We're starting to see a lot of momentum in the smaller caps as well now, which we've really lacked over the last few years. We're coming up to those all-time highs, as you said. So some work to be done up here, a lot of resistance. US markets are breaking out to new highs. We've got the election out of the way. We've still got low interest rates. Potentially Syria is backing off. So it's all looking okay. If we can get up into this all-time high area and break free, then it looks okay. But I'm expecting prices to stall up here and maybe pull back a little bit. I'd be happy with that. I think it'll be healthy. I think ultimately we're going to go higher. But I'd just like to see a little bit more work done in the sideways.
Okay, so medium to long-term positive and
Yes.
maybe a short-term pullback.
Yes.
Exciting things happening on the market. I think we're at an inflection point for a few of the cycles in terms of earnings. Momentum is looking pretty good, and the global backdrop, the best that we've seen in years as well. But let's go to our first caller of the night. We have Mark from Budrum on the line. Mark, welcome. What's your question tonight for our panel?
Oh, evening, Julia. Thanks for taking my call. Got a two-part question about Platinum Asset Management. I'm sitting on a nice little profit and I've got a lot of financials, so I'm just wondering if it's worth keeping or whatever. And with coffee, that's a little one there. Just wondering if there's a technical on that, COF.
Sure. So we're having a look at Platinum Asset Management, PTM's the stock code, and also Coffee International, COF. Two very different companies, but let's start off by talking about Platinum Asset Management. Fund managers, you know, things are looking better in terms of market and inflows. I guess looking at the stock chart though, what would you say, Nick?
Yeah, look, I think it looks okay, Mark. It broke out through a big line of resistance there around that 520, 530, rode quickly up to 640 and reversed pretty sharp back. So the fact that that reversal back down to that level of support was quite sharp. I would expect some more sideways price action, but you know what? So long as it holds above $5.20, I think the potential is it'll keep going back up, maybe retest 640. I wouldn't get too carried away beyond that point at this stage. But, you know, good day there today. Market's looking okay. There's no reason why we can't go back up to 640. I know Pete's saying sell, but I'm saying just hold on, mate. Use a trailing stop.
Okay, so use the trailing stop in there. The other one's an interesting one, Coffee International. We know that the mining services area has bounced back quite strongly. Coffee International, probably about 10 to 15% exposure to direct resources. In fact, the geosciences, they're trying to build that division to make up a larger share of their earnings. Be interested, Nick, looking at mining services, you know, we've seen a strong bounce back. Can it continue? Because the last 2 months have been phenomenal. Yeah,
a lot of these smaller cap stocks, some of the mining service stocks have come out of ranges. We've started buying some of them. So when they break out of a base, and really coffee, the base was about 4 or 5 months long, not that big, but good enough to form a good foundation to start a trend from. And that's what we're now seeing. The problem with a lot of these stocks is they've fallen a long way. There's a lot of lines of resistance to get up through. Coffee has a line of resistance at 30 cents. I think we can test that the way it's going at the moment. There's certainly a lot of upside momentum, but just be careful. At 30 cents, you might get a bit of a pause at that kind of level. But at the moment, there's no reason not to be holding it.
Okay, so looking pretty good from a technical view. Let's go to our next caller of the night. We have Craig from Brisbane on the line. Craig, welcome. What's your question tonight for our panel?
More technical. ABQ, I followed it back in 2011 when it ran up to 8 cents. Just a bit of background. It's believe it or not, it's probably the 5th biggest laterite nickel deposit in the world. I've been fighting for a while with Sumitomo of Japan, which we know is one of the biggest companies in Japan. They're making big headway, but technically monthly back, weekly, daily, it's all shaping up very nice. There was good news there today, big volume. Technically, I see about 4.5, 5 cents.
Sure. So, having a look at ABQ and a technical view, Nick?
Yeah, you're quite right, Craig. Good day there today. Nice high close, good strong volume, which we needed. It tends to get a bit dry, that stock, every so often. So again, we're seeing a stock in a range, if you like. The top end of that range is around the 2.7, 2.8 cents. Bottom end of the range at this stage is around 1.5 cents. So it's one of those stocks that when it moves very quickly and reverses just as quick. So if we get follow through from today's movement, which is quite possible, probably look for that line of resistance to come into play as an initial, but generally speaking we might poke through there and up towards that 3.5 cents. I'm not too keen that it'll go too much further than that at this stage. As I said, it's reversed pretty sharply from that level before, but that's a significant increase from where the stock was just 1 week ago anyway, so it looks okay for the moment. Pretty thin on the ground though.
Okay, so Axiom Mining, an interesting one. And we've got Adonis on the line from Melbourne. Adonis, welcome back. What's your question tonight for our panel?
Hi Julia, how are you?
Good, how are you doing?
Good, thank you. I was after a technical on both Atlas Iron and Rio. Atlas Iron I'm long on and in profit, and I was just wondering where Nick thinks that might go. And also Rio sort of broke past that $62 sort of resistance level today, and just interested in whether he thinks it might sort of break out from here and go quite a bit higher. It's very heavily sort of overbought on the charts, but yeah, just interested in Nick's thoughts on both of those, please.
I think this is a really interesting question, and that's because Atlas Iron's share price is down 42% over the last 52 weeks, whereas Rio Tinto's is actually up 15%. But over the last quarter, they have been tracking a little bit more together. Rio Tinto's up by 18%, Atlas Iron's up by 11%. So I guess the big question for traders would be, is Atlas going to play catch-up? Because it is a more leveraged play on iron ore prices.
Sure. Well, I think the whole small ordinaries sector itself, has been dramatically underperforming for the last 4 years. That's the area I trade. I can tell you it's been a difficult 4 years. So Rio fits into the big caps. They're all doing quite well. Okay, the same kind of stock per se. But Rio certainly looks a lot better. There's a lot more momentum here. Yes, Adonis, it's broken out. It looks great. It's had a nice impulsive move from around that 50 up to 62. Nice low volume pullback. We're on our way again. I think we'll head up towards $70. Big resistance around that 70, 72, which I think we'll see it stall, but I'm quite confident we'll get up to $70 over the next few months. So stay with that one, absolutely. AGO, not as good as at the moment. Doesn't really do a great deal for me. I wouldn't be getting involved at the moment. Did have a good day today. Looks like it's probably found a little bit of a base down here around this 70, 75 cent level. So if you're an aggressive style trader, probably buying it here, leaning on that support with a stop loss, looking for to rotate up towards around 110, but can't see it going beyond that at the moment, but it looks okay.
Let's go to our next caller. We've got Stuart on the line from Perth. Stuart, welcome. What's your question tonight for our panel?
I'm looking at buying some stock in the energy sector and also the telco sector. I'm just wondering what is the preferred stock for you guys in those two sectors, please?
Oh, so looking at the energy and telco sectors, very different. I guess a lot of people lightening their load in terms of the Telstras of the world, but what about the IINets, the TPGs, M2 Communications, Amcom? So, Nick, looking at the energy and the telco space, any tips, any...
Yeah, the telcos, we rode the telcos over the last couple of years very, very nicely. The most recent ones, Singtel we got out of a couple of days ago, and MTU were just in there by the skin of our teeth. Been a bit volatile over the last few months, and we're out of most of them, but we did have good runs over the last couple of years with those. So some good sideways consolidation taking place across the board there, Telstra included, and that's a healthy thing, but we'd want to see them break out, so not ready to get back involved at the moment. In terms of the energy, a lot of volatility there. Pete makes a very good point about sleeping at night, because trading the smaller ones, very volatile at the moment, and Woodside looks quite good. It's popped up above a level of resistance. It's consolidating above that level around that 37.50, 38. That's a good sign. And if we can push up a little bit higher through $40, then there's no reason why we can't push up. We're fresh, what are we, fresh highs over the last 2 or 3 years now, so that looks good. That's never a bad thing.
Yeah, it's nice to see Woodside finally breaking out of that trading range. Let's go to our next caller. We've got Helen on the line from Sydney. Helen, welcome to the show. What's your question tonight for our panel?
Oh, good evening, panel. Actually, I guess this question is mostly for Peter because under his recommendation, I bought Saracen Minerals, and the day I bought it, it went down and hasn't gone back up since. I was wondering whether he still likes the stock, and I also bought into Kingsgate today as well. Just, about those two and the gold sector in general, I guess.
Well, this is a contentious one because the gold space, lots of different
Helen,
views
whereabouts did you buy it?
31 cents.
31 cents.
Yes.
So looking at the gold price, which is probably the next question, if you're looking at stocks like Kingsgate as well as Saracen, where do you see the gold price going, Nick?
I think gold looks okay. We certainly got pulled into some of these stocks, Helen. I mean, personally, I got into Saracen at 21 and out at 25. If there's one good positive I can take out of Saracen at the moment, the pullback we're now seeing is on very, very low volume. So we moved from 15 up towards that 30 level on strong volume. We're coming back on low volume. And that says to me the insiders are not selling. It's weak hands taking profits after that sharp run up that Pete mentioned. So that's a positive. But that's not to say it can't fall any lower. But so long as it does fall on low volume, that should be okay over the long term.
And we've got David on the line from Sydney. David, welcome to the program.
Thanks, Julia. Thanks for taking the call. I'm interested in both a technical and fundamental on Flexigroup, FXL. I think reported pretty good earnings, yet it's really just gone sideways for about the last 3 or 4 months. Interested in Nick's view if he thinks that's just a healthy consolidation, but also interested in Peter's fundamental view of the stock.
Sure, so let's go to a technical view first. Flexigroup, what do you think?
Yeah, David, it is going sideways. Usually that's a very, very good sign, especially if it's on low volume. That's exactly what's happening with Flexigroup here. It's close to an important level down here at around 420. I probably wouldn't want to see it go down through 420 on heavy volume and stay down that way. I'm happy for it to poke down through there and come back up into the range. That's fine. If you're aggressive, want to add to your position, you can buy some down here and lean against 420, perhaps have a stop at $4. But really, $4 would certainly be the line in the sand. I wouldn't want to see it go through that. Consolidation, you never know how long that's going to go on for. Personally, I like to see stocks break out of the consolidation before I jump on board. Aggressive traders can lean against that support, buy down here, wait for it to rotate up back to the upper end of the range here, which is around the $4.80 level, and then you can add to positions if it breaks through. So a little bit of a skill in trading around that at the moment, but if you're holding and you're a little bit nervous, line in the sand, let's call 410, it breaks down through there, you wouldn't want to be holding it anymore.
Abe on the line from Sydney. Abe, welcome. What's your question tonight?
Oil search, it seems to be encountering a resistance at about $8.50. I think this time also about Sigma Pharmaceutical. Thank you.
A very choppy stock, moving in the right direction. It's not a stock I personally trade, but there's certainly momentum there. We're at significant highs and moving higher, so that's a good thing. But it's just very choppy. You've got to give it room to move. It's going in the right direction. I probably wouldn't be overly concerned unless it broke back down through 740, and that's a fair way away. So stay with it, but just expect a little bit of backwards and forwards with the general upward bias.
What's your question tonight?
Hello. I'd just like the panel's view on McMillan Shakespeare. If you could give me an idea of an entry point for that, or am I better off staying away from them at this point?
I think from a technical perspective as well, Nick, this one's looking quite interesting because the last 2 days of falls, you know, does the stock price look even more vulnerable?
I think it does in the short term, and I can extend this back to the rise off the July low. It's been a very, very good movement off that low point. We've seen a couple of down days. Today actually had a very strong close, so it looks like there's certainly some people there looking to buy the dip. I would like to see it pull back a little bit further over the next couple of weeks, maybe as far as $10, but I have to say that would be a buying opportunity so long as it's on low volume, and if that is the case and we start moving up, I would expect prices to continue to move high towards $17. So if you're looking for a buy point, low volume decline over the next 3-4 weeks, maybe as far back as 10.50, that's your buy point right there.
Okay, so it looks like flushing out all the traders and then letting the share.
Yeah, I think it's buy the rumour, sell the fact. I mean, everyone was talking about it. Everyone was talking about it. Everyone, you know, it was everywhere. So elections come and gone. Everyone's taking their profit. let that go, and that's why I think it's going to be on low volume, and then that's your time to buy. But it's going to take a few weeks.
So McMillan Shakespeare, I mean, this is a stock that I've been checking the share price of every single day, and today I didn't check it. So I guess election's finished, no more talking about McMillan Shakespeare. Back to fundamentals. We've got David on the line from Melbourne. David, welcome. What's your question tonight?
Hi, Julia. Questions regarding one that I've been in for a little while, probably since about, probably around sort of April or May.
Beautiful
Gibson Iron is the ticker, MGX. I note that this one has a pretty strong balance sheet, a reasonable cost of production in terms of where the curve sort of sits. But interestingly for me, and I'd be interested in your panel's thoughts on this one, I actually feel there's probably a rotation from the retail investing community out of Atlas Iron into this one, and into probably BC Iron as well.
Nick, you're holding.
Nice work, Nick. Up 72% over the last 3 months. How's it looking on the charts?
You never make a big profit by taking a small profit there, Pete. It looks good. Every down day we're having at the moment, David, is on very, very low volume, and up days are on strong volume. It's a good, strong trend at the moment. There's no hiccups there. We didn't get in down the levels that you got in. We waited for break up, so we're in around that 60-cent mark. But personally, I'm holding it. Trend looks good. Resistance up around 90-95 cents. I would expect the trend to continue and push up towards that level. At the moment, we're going to hop you out around the 65-66 cents if it pulls back that far. So we're giving it a little bit of room to move, but the trend's good. There's no reason to sell it in my view.
So the trend is your friend.
Trend is your friend.
Riding that momentum. It is now time for a viewer email. Shane writes, "Hi, could Peter please outline his thoughts on what's likely to happen with Discovery Metals, DML, in regards to its current refinancing talks?" Cheers, Shane from Tasmania. Discovery Metals, if you can bring up the chart for this one, it's not a pretty looking chart. Nick, the share price chart looks like a slippery slide.
Sure.
Would you be punting on this one?
No. It's interesting, there's a lot of volume in the last couple of weeks coming into that stock. So either there are a lot of people having the punt, or people know what's going on. There's a significant increase in volume, which generally suggests there's something big going on. So, but that's not the kind of trader I am. I don't punt like that. It's going sideways. It has been going sideways for the last few months, and there's no indication that it's going to be pushing up at this stage.
Okay, let's go to our next caller. We've got David on the line from New South Wales. David, welcome. What's your question tonight?
Hi, Julie. Thanks for taking my call. I've just got a quick question. Rex Minerals, RXM, and YTC Resources.
Sure. So looking at Rex Minerals, I mean, the stock chart's looking pretty good for this one as well. So we might start off with a technical view from Nick.
Yeah. Again, this is one we've recently bought, but just hanging on with the skin of our teeth on this recent pullback, David. Volume on that pullback has been very light, so from a purist technical perspective, that's a good sign. It's just come a little bit too far back for our liking. So we're not going to be staying around in that for too much longer if it does happen to come back a little bit. Good support around 50-55 cents. I would suggest if it broke down through 50, then I would certainly be concerned from a technical perspective with volume aside. But good thing about it, that reversal in the last week has been on low volume.
And we have a call through from Anne from New South Wales. Anne, welcome. What's your question tonight?
Hi. I was just wondering about what your opinion is on Fleetwood. They seem to have a pretty good day today.
Finally. Looking at Fleetwood just a year ago, this is a stock that was trading at around about $12, and now it's around about the $4 mark. So a lot of pain there. And I guess the question is whether it's an opportunity to perhaps get in. It, of course, is involved in temporary accommodation, and a lot of that demand was coming through from the mining space. So I think we'll go to Nick first on the charts. Would you be entering into Fleetwood at this point, or what would you be waiting for?
Yeah, not just yet. It's certainly doing the right thing at the moment. It's fallen a long way. Our momentum model's got us out in June last year at $11.58. So that's the power of momentum to stay out of these kinds of situations. It certainly looks like it's going through this three-phase stage that we've talked about before. First stage of the turnaround is capitulation, and we saw that a few months ago where the share price fell rapidly from $10 all the way down to $3. Huge increase in volume came in there as the insiders came and bought it. The next phase is sideways congestion, and that's basically what we've been seeing over the last 3 months. Very positive sign, especially when volume goes down. Volume has been declining, which is good. Probably need a little bit more to happen and a little bit more sideways price action. But I would suggest that if we can start making upward progress on low volume, then all the sellers are out and the stock is ready to rise. So I'd certainly be keeping an eye on it. If you're aggressive, by all means put your toe in the water now, but there might be some ongoing consolidation for another month or two. But certainly we're halfway through phase 2. Phase 3 is when we start to rise.
James, welcome. What's your question?
Thank you, Julia. My question is, with the prospect of the mining tax and the carbon tax going, companies like Cockatoo Coal Mine, would they have any prospect, do you think?
Sure. I mean, it's a good question because I guess the question is, first of all, in regards to the mining tax and the impact it's going to have on miners, but secondly, on Cockatoo Coal, which of course is a coal company, which has been a very difficult space to have been in. Having said that, the interesting thing about Cockatoo Coal for me is the substantial shareholders. You've got POSCO with 13%, SK Australia with 5%, Cause Australia with another 4%, you've got Korea, I think it's East West Power, KEPCO in there, so you've got some pretty big global players in there.
They all want coal.
They all want coal.
Yeah.
The price of coal is pretty cheap though.
Yeah.
And the question is, you know, what happens to a company like Cockatoo with coal prices, you know, languishing? You still have quite a bit of supply in the market, especially in Australia, because the lower Aussie dollar means that some of the supply that would have gone offline is probably sticking around. Cockatoo Coal, Nick, I mean, it's run up like many of the resource companies have.
Yeah.
Is it going to continue?
It seems to be stalling here, James, and there's very significant resistance at 10 cents. It's a little bit illiquid for our kind of liking, but it's moving in the right direction. I wouldn't be surprised to see it have a little bit of a pullback, a little bit of a pause here, because it has run a long way very quickly off a very low base. But 10 cents is really the line in the sand. If we can get up and through that, I'd be a lot more confident with it. But look for a little bit of weakness in the next couple of days, and maybe, you know, as long as it doesn't fall back through 4 cents, it's probably okay.
Okay, so Nick wanting to see Cockatoo past 10 cents to be a bit more confident, and perhaps it's time for a pullback on Cockatoo. Got an email here from James, and James writes, "Hi team, I'm wondering your thoughts on Boom Logistics." Thanks, from Gerard. So, talking about weakness in coal, I guess this is one company which has exposure to that. I might go to Nick first for a technical view on Boom Logistics. It seems to want to move higher.
Yeah. Again, it's doing this three-phase movement. You know, we had a big sell-off. We were trading around 32 cents, and we just did the big swan dive down. What's that, down to 8 cents? And again, when we got down there, we saw a lot of volume come in, a lot of insiders coming in. Market's now been moving sideways for a couple of months. Volume has declined. So I think some good quality buying down that way, and prices are now drifting sideways in phase 2. So we're looking for prices to slowly move up on low volume. That would be a good sign. Significant resistance at 20 cents. That's about as far as I could see it go up on the upside at the moment, Jared.
Nick, are there any mining services companies?
No, we're not seeing any of that come through our momentum models at the moment.
Okay.
No.
Let's go to our last email of the night, and the email says, "Hi panel, can I have a technical and a fundamental view on QBE? I bought QBE some years ago when the price was much higher, and I'm unsure whether I should continue to hold or sell." From Mike. So QBE Insurance, a lot of volatility in this stock. You know, things should be moving in its favour with the Aussie dollar moves and the US 10-year Treasury moves, but we've seen quite a significant little pullback just recently, Nick.
Yeah, it certainly has. It's come back to a nice level of support, Mike, at $15. I would be concerned if it dropped down through that. Price action has been very good over the last year or so. So look, it's okay here. Volume, not too bad on that pullback. I'm not quite sure why it's pulled back. Was there some kind of announcement? Gap down quite significantly there, but it's sitting on support just below 15. I would hold on. You've weathered a lot of pain, and I'd probably hold on now. And look, if it drops down through that 1480, then hop out there, and that'll be enough to trigger a trailing stop.
And that's all we have time for today. Thanks so much to our guests tonight, Peter Escher from Invest, and also Nick Radge from the Chartist. And to you, our viewers, for all your calls and your emails tonight. Thank you. Until next time, I'm Julia Leaf.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.